Hey everyone, I want to give a quick shout out to this episode's sponsor, Copper. Copper is an institutional custodian in crypto and provider of prime services. They're also one of my favorite companies in the space, so thank you very much to Copper for making this episode possible. You're going to be hearing all about them later in the show. All right, everyone, welcome back to another weekly roundup edition of On the Margin. Today I'm joined, as always, by my boisterous co-host, Mr. Mark Yusko.
Whoa, okay, setting the bar high, or basically saying you might have been a little too boisterous last evening, so I'm going to have to carry the load today since you're out celebrating with your mates. But so, I have some stuff to talk about, but quick reveal, right? So, it's Bitcoin Friday, so I got the orange on, and we went with the cold storage socks.
Love it.
For two reasons. One, as a shout out to everybody who is freezing their took us off. Places like where your parents are up in Montana and Wyoming and Colorado. I mean, it's cold. Now, I guess in Oklahoma, where my wife and daughter are going to celebrate my mother-in-law's 85th birthday, it's like 1. So that's coming here 4 days from now. But it's cold. But more importantly, every single day for the foreseeable future, a couple $100 million, $200, $300, $400 million of Bitcoin are going into cold storage, and they're not coming out. And that supply dynamic is just not understood right now. Everybody's like, oh, the ETF was such a failure. Like, what are you talking about? On every measure, it was a wild success. On every measure, on trading volume, on inflows. Today I think it's like the 5th highest daily inflow of all of them, including the big dogs like Triple Q and VOO. So just silly. But it was like, but the price fell. Like, yep, that's what happens when. And we talked a little bit about this, probably didn't talk enough about it. There was a whole bunch of front running. And then we probably all underestimated the outflows from GBTC.
Yeah. So we've got some, so just to put in context here, I'll share my screen. We got to have Eric Balkunas back on here because I keep referring to the content that he's putting out. He's done a phenomenal job covering this. But if you look at like just another way to put in context the volume that these what he's dubbed the newborn 9, the new 9 approved spot ETFs. I mean, look at these volume numbers. This is IBIT and FBTC, so that's iShares and Fidelity's ETFs. They're in the top 5 for volume on all US ETFs. Like to your point, right below QQQ and VOO. And even Bitwise, would love to see Bitwise here. Bitwise is also in the top 10. So it's just, I think it's a phenomenal success. And there was always going to be overhang in terms of GBTC. They've still kept very, very high rates. They've got 150 basis points compared to, I mean, Bitwise has a waiver, right, on the first 6 months or something like that, or below a certain number of AUM. But here's the overall, this is the most updated data in terms of flows and volumes as well. But to your point, so both on day 5, FBTC actually cracked $1 billion as well. So the amount of the total ex-GBTC inflows is now over 3 billion, 3.3 billion. But we're fighting the outflows from GBTC, and that's somewhere between, you can see here, about 400 or 500 million per day, which is pretty substantial. So, Mark, how long do you think the overhang of the GBTC outflows are going to be with us?
Couple weeks. I mean, pick a number. I mean, that like 85% of statistics is made up on the spot. I mean, I haven't done the exact math, but there's a whole bunch of holders that bought GBTC when the price was 10, 15, K. They're not selling. Irregardless of what the fee is, you can charge them 10%. They're not going to sell because you're not going to take a tax hit and pay a huge amount of those gains away just to save, 1% or 120 basis points. And clearly that's what Grayscale was banking on. Now, all the money in the tax exempt accounts, IRAs, retirement account, that's going. And, by most estimates that I've seen, that's about 15, 20%. I don't think anybody knows exactly of their assets. And I think what people just don't appreciate, I don't think they appreciate, is, Grayscale, yes, it was $25 billion
Yep.
of AUM, but they didn't raise $25 billion. Yeah, I don't know the exact number, but my gut is it's around 10-ish billion. And that money came in the last bull run. And what people they've forgotten, that big first move from 10 to 60 before the famous Elon quote, most of that was GBTC, right? You had, $6-8 billion coming into a market that was still, reeling from the previous bear market before the last bear market. And, somebody was going after Eric on Twitter yesterday saying, your numbers are wrong. I've never seen a $3 billion inflow without, prices mooning. I said, well, he says, Holmes, the numbers are right. So yeah, you're just missing a variable. And that variable that this person is not paying attention to is the sales. And the other thing that people aren't talking about, and I don't understand because it happens every single year, is Chinese New Year. Chinese New Year is coming and they got to fill the red envelopes with cash. So they sell Bitcoin. And this year, the sales are going to be worse than a normal year because you had big gains. And then we're going to have another one in, late March, early April, where people are going to have to sell to pay Uncle Sam. So these seasonal things, they happen. And the good news, like my socks, the penguins are going to be out there snatching it all up and stuffing it away at Coinbase. And, there's the amount of money that's going to be made, both in fees and transactions, is going to be really good for these companies. And I think people are just lost in the weeds for some reason. And I mean, it's our own fault, community-wise. I actually uttered the word God candle just like everybody else. And that was, clearly not smart because my 30 billion number was never a day one number, right? 30 billion is 0.1% of the 30 trillion. That was never a day one number. That was over time. And I will say, I did not believe, and I still kind of don't believe it, that three of the largest groups that I'm counting on all accepting this, finally, and saying, yes, we're going to put it in the models, Merrill Lynch, UBS, and Vanguard, basically got a call from Ms. Warren. You're like, well, you can't say that for sure. Like, I can say whatever I want. I'm boisterous, remember? So I can say that. And I believe that's what happened. I think Ms. Warren gave him a call and said, nope, you're not taking it. And
so I don't even think, I just think that if you talk to people within these large financial institutions, there are lots of people, first of all, they're all very smart, but some of them have really taken the time to understand what crypto is, the opportunity it affords. I don't know, for people who aren't on Twitter, if you've seen the Van Eck Twitter account, what it's been doing at the Franklin Templeton one, Jenny Johnson, she's not getting enough credit. I mean, she is out there talking about tokenization. Actually about 9 months ago.
Is that who's the Franklin Templeton person?
Yes.
Okay. No, it's amazing. I mean,
it's her and Abby Johnson at Fidelity. I mean, two of the most forward-thinking, heads of financial institutions. A huge credit to both of them. But about 9 months ago, Jason pinged me. He was like, "Hey, I just got off a call with Franklin Templeton. These people knew their stuff." Sometimes, when you talk to people at these big banks or large asset managers, they're still wrapping their heads around Bitcoin. They were way more in the weeds than that. So I'm not surprised I'm not surprised to see this, but yeah, I mean, I think the big, but there are a lot of people that have not bought into that, and they're still just looking at it as this is some either digital pet rock or these numbers don't make sense to me. This is just icky. I mean, you saw Jamie Dimon talking about this at Davos.
But that is the oldest damn trick in the book.
Yeah.
I tweeted that last night. Are you not paying attention? When you want to accumulate a lot of an asset, what do? So that's what Jamie and everybody else in that upper echelon is doing. Other than Larry. Larry's taken the other path. He's like, oh, I'm the enlightened one now, which is smart. And I'm the trusted one. And they won't do as good a job educating as Bitwise is doing. Bitwise is Matt Hogan and those guys have been educating on ETFs and how to integrate into your portfolio for 2 years, right? They've been working on this for 2 years and it's paying off in spades. But BlackRock will be close because they can pay big money to get really talented folks to produce content. Now, their ad was cringe. I mean, it was cringe. The guy had too much makeup
but it's gonna work.
No, it's gonna work. It's gonna work because they know their client base. They know their client base. Their client base wants to hear new age music. They want to see, the no tie with the suit coat. They want to see very calm. They don't want boisterous. They don't want Yusko. They want Roboton. In fact, I said, are we sure that wasn't AI? I'm not sure that guy was a human. But look, Jamie is clearly talking down the asset so that his friends can buy it. They are going to do stuff to try to, tamp it down so they can accumulate at a lower price. The second thing, and this, I said this last year, every year at Davos, Jamie gets on TV, right? He's one of the most powerful people in the world. You don't have to like him. People say, oh, he's an idiot. He's not an idiot. Trust me, he's not an idiot. He's a really smart man. And no, it's just so bad. It's just he's
a very competent operator. I mean, one of the most.
He's one of the most powerful people in the world. You don't have to like him, but he is one of the most powerful people in the world. He runs the second or third largest bank in the world. And he has 10 minutes on CNBC. He can talk about anything he wants. He can talk about climate scam. He can talk about, what they had for lunch at the private room with the sheikhs. He can talk about anything. He's talking about Bitcoin. That is not a bad thing. It's actually a really good thing.
Hey everyone, wanted to give a quick shout out to this episode's sponsor, Copper. Copper is an institutional custodian and provider of prime services within digital assets. Today, what I want to talk to you specifically about is Clearloop. Clearloop is a solution from Copper, which to me solves one of the biggest problems for market makers, high frequency traders, hedge funds within digital assets. The exquisite pain of what I call the pre-funding problem. So if you want to take advantage of arbitrages that pop up across different exchanges, or you just have a trading strategy which requires you to be active on multiple different centralized exchanges, you have to pre-fund your account at each one of those exchanges. Now, this is not ideal for a whole bunch of reasons. One, you have to take counterparty risk from those exchanges, which, as we saw this last year, can have major consequences. Two, it's capital inefficient. You have a whole bunch of assets spread out. Most of them are not doing anything most of the time. And three, it's just not great from a workflow standpoint, and it creates administrative overhead. So enter Clearloop. Clearloop is the secure MPC custody solution provided by Copper. The way that it works is you deposit your assets into this MPC solution, which is owned and operated by you. Clearloop syncs up with a whole bunch of your favorite exchanges, and then you can trade securely from Clearloop itself while not taking any counterparty exchange risk with any of these exchanges. And it's a super easy and nice UX. Now, Clearloop is trusted by the likes of Flow Traders, Brevin Howard, Nickel, some of the best in the business. But the coup de grace is, in the extreme edge case that one of these exchanges were to go bankrupt, they have a very clever trust structure which segregates your assets and keeps you completely protected. So, click the link at the bottom of this episode, especially if you're a hedge fund or market maker and you want to learn more, or better yet, Dimitri, the CEO, is actually going to be in person on a panel hosted by yours truly at Digital Asset Summit. So DAS London, that's March 18th to the 20th in London. So you should definitely click the link at the bottom of this episode, give your boy some credit, but also, even better, come to DAS London and hear from Dimitri himself. All right, cheers everyone. I've been in this space and watching it for 6 years. I'm just happy people are talking about, I mean, there was a period of time where people wouldn't talk about any of this stuff. And now everyone at least has an opinion on it. A lot of people like it. A lot of people don't like it. That's totally fine. I think one aspect of it that I've been thinking about recently is the there's this really great quote from Jack Bogle about commodities. And this is, it's just funny. I didn't realize that Jack had said this about commodities, but this is a lot of the pushback that I've gotten about Bitcoin in the years when I try to talk to people about it. So the quote is, commodities are a real loser's game, he told me. In the long run, they have no internal rate of return. You buy a commodity, gold is a good example, you're betting you can sell it to somebody for more than you paid for it. I don't have an intelligent comment for that. It's absolute rank speculation. So, it's just funny to me. I've been thinking about this within the context of Ethereum because ETH offers yield. And there's a lot of, actually within the Ethereum community, there are a lot of thoughts on whether to prioritize ETH, the asset, or the holders of ETH, the asset, or liquid or stETH, the yield-bearing asset for ETH. And I don't know. I think gold is not widely adopted within the financial system, right? And I think the reason for that is exactly what Jack Bogle just underlined there, because many people just need, I need to be able to fit this into something like a DCF. I need to be able to model some sort of return here on a spreadsheet in a way that's going to make sense to me. And I want my dividend or the payment part of fixed income or whatever it is. And for that reason, I actually think even outside of Bitcoin, I think there are going to be some other interesting crypto products that people are going to be talking about in coming years.
The thing I love about Jack Bogle quotes is that everyone attributes them to this kind, gentlemanly grandpa who was perfectly pure intentioned and he's just trying to help. He's richer than everybody else that invests in his company. Why is that? He played the game perfectly. He paid the government a lot of money so that he could be one of two primary providers of passive strategies. They got a law passed in 1986, Tax Act of 1986, that changed the way corporations did their pensions. They went from defined benefit, where you knew what you were going to get, to defined contribution. There were two things that did. One, it cut the cost to corporations by 30%. They could put in 30% less of their profits every year into the pension. So they all voted for it and lobbied for it. And Jack got a constant stream of flows where he could charge, just a little bit. I don't charge very much. I just charge a little bit on a big shit ton of money. And he got super rich. And if you look at the average retiree today, they're fucked. And I shouldn't use that language, but they are fucked because they don't have enough. They have not compounded at a high enough rate. But, it's so great because I'm paying low fees. You've been scammed. They have been scammed. So to say commodities have no value, really? Okay, price of gold in 1933 was $33. Today, an ounce of gold is $2,000. That's a return. In fact, that's as good a return as any other asset that you think is so great. And it's better than the fixed income returns that everybody talks about because those have been devalued by currency devaluation. So again, if you're at the tippy top in the all-seeing eye, you love this shit. But the average person is getting a raw deal. So God rest his soul. Everybody loves him. And they're probably going to get, lots of comments that Yusko, you suck for picking on Bogle. But he was not.
Well, everyone has their brand or their persona or whatever, but it's not just him. I mean, I've lots of people that I've talked to over the years. That's their big problem with Bitcoin, that they just can't wrap their heads around. It was just interesting to see that this is something that people have been knocking commodities.
It's 100% correct, right? It's why it's classified as a commodity, right? It is a commodity. And Bitcoin in particular, it is digital gold, right? It is this store of value that's more divisible and more portable. So it has all the scarcity of gold, but it's better. And I meant to tweet this, but I just got lazy and I didn't go find the pictures. But there's an interesting thing about Bitcoin that traditional commodities don't have. And there was and what I was inspired by is after JP Morgan, after Jamie was talking, someone tweeted the picture of, hey, Jamie, at least Bitcoin's verifiable, because there was a story that JP Morgan bought a bunch of nickel, right? The mineral. And it was in a warehouse, and literally they opened the bags. It was full of rocks. It wasn't nickel. And so I wanted to get a picture of a vault full of gold and a vault that was empty, because no one actually knows if all the gold is in Fort Knox. There are lots of rumors that it got taken out years ago, and you can't verify that it's there. With Bitcoin, you can verify on chain how much a central bank has or how much JP Morgan has. That's not true with physical commodities. They have to be independently. And this is the whole issue of tokenizing assets. The big challenge is you can tokenize my house, but someone's got to check that it didn't burn down. Or
Yeah. I think you're getting at something super important here, Mark, which is there's a recent change to my mental model for crypto specifically. So when people talk about, I think one of the big value propositions of crypto on a long-term time horizon is, first of all, it's a global financial system, but also the assurances that it affords you are based on cryptography and not on whatever your local legal jurisdiction is. And that's a massive difference. So first of all, blockchains will design a lot of cost out of the system. There's been some misunderstanding about this, and a lot of the cost that exists in global finance is not because the technology is just horrible in the rails. So it's for things like clawbacks and stuff like that. You have to design that cost in. That's not a tech thing, but what you are subject to, TBD on how much fees are going to go down. They probably will go down a lot. But if you are in a jurisdiction that doesn't respect property rights, you have to bet, or you have to trust your government that they're not just going to take your stuff. And in a crypto system, you don't have to do that. You can, because everything's programmatic, you can grant, hey, this entity can do this on my behalf, but not this. And you don't need, it's just baked right there in the code. And
your point, property rights.
Yeah, property rights.
Property rights is what defines success in the world. If you live in a jurisdiction that does not have well-established and enforced property rights, it's horrible.
Yeah.
Horrible.
Well,
and that's even common law, right? Even UK British common law, all the colonization, and okay, that was bad, very bad. But it did leave a legacy of good law and good property rights. And look, government can still, through coercion and violence, mandate, right? They can say things like, force majeure or eminent domain, yours is mine now. And most reasonable democracies / republics don't do that very often. But there are plenty of places that do. And can't do it in a cryptographically secure ledger that can't, everybody's like, well, they're just going to ban it. Like, how? You're going to turn off every computer in the world simultaneously? I mean, every node in the world, not every computer, but every node that's connected to the network. It's not happening.
Yeah. I also think if you squint at it already, there are parts of our financial system that give you a glimpse of what the future is going to look like. So Swift, for instance, is not owned by one country or entity. What's the reason for that? What is not a tech thing? It's because there's value in if all of the countries in the world are going to use this system, then we want it to be somewhat neutral. It's not
all the countries we
neutral.
Want to use it, not right. The countries that we don't like, because that would be bad.
Well, it's obviously not super neutral, right? There's a degree, but you
Yeah.
can already,
Well, and who gets to decide who's in,
yeah.
who's in? That's
Okay,
interesting.
here's actually something that I want to get your take on because it pertains to crypto, but it's a broader story as well. Are you familiar with the Chevron doctrine? So,
Yeah, but no.
okay, this is it's actually a pretty landmark precedent in U.S. administrative law. So this was a case that happened back in 1984. There was a suit, Chevron versus the NRDC, the National Resources and Defense Council, and basically there was a dispute around what like there was a Clean Air Act that was passed in 1963, and there was a definition within the Clean Air Act, something called the stationary source, and there was this disagreement about what the word source actually means. And this it had implications for something that Chevron was trying to do back then. Went all the way up to the Supreme Court, and they decided that in the case of ambiguity, so basically, for baseball fans, is kind of a tie goes to the runner situation. They would defer to regulatory agencies, and this decision ended up being extremely impactful. This isn't my editorializing. If you go to the Wikipedia page for it, it says that this is one of the most important decisions in U.S. administrative law. It's been cited in thousands of cases since its issuance in 1984. So, 39 years later, in May of 2023, Supreme Court granted certiorari, whatever. They're going to reevaluate this Chevron case, and it looks like that is going to be reversed. So it's pretty interesting because basically what it is it's a shift away from regulators who have been given an enormous amount of latitude, and instead things are going to go to the courts a lot more and to Congress. So the pros of something like this, if you haven't been happy with the SEC, which I think it's becoming clear outside of even just crypto, a lot of people are not. And we're going to get into, because this has direct implications for the Coinbase SEC lawsuit that's going on. Then basically this is going to shift power away from regulators and towards the legal system.
Yep.
and also Congress to regulate this stuff. So the pros of that, again, if you haven't been happy with regulators, this is good. But on the more negative side of things are going to take a lot longer. The legal system is a lot of things. Fast is not one of them. So it's just it's going to take longer to figure these things out. But it's
Not one.
yeah, it's kind of one of these things that feels a little nerdy and like a legal thing, and how is this going to impact me? But it has massive implications.
Oh no, and look, those are the things, the foundational things that create huge kind of shifts over time, both in wealth and rights. And it's the little things that no one's paying attention to. It's like, the repeal of Glass-Steagall. It's like, oh, that's a stupid law that was created in 1930. No, it made a huge difference to a certain number of large banks that got bigger and bigger and bigger. And, it's stuff like that what bothers me about it is these things are always bought and paid for, right? They're always lobbied for. And, it's like ACA, right? The Affordable Care Act, which has nothing to do with affordability or care. Neither one of those things have anything to do with what that bill actually does. It basically regulates an entire industry into existence that can skim money out of the system for not providing it. Like United Healthcare is not a healthcare company. They're a claims processor, yet they've become one of the largest and most successful stocks in U.S. market history because they grift. And that type of stuff is, to your point, it's all on these little things that are part of law. And once you get them changed, once you get them integrated, there's no going back. And well, there's not no going back. You can go back, some number of generations later when people forget. But, it's like, it was amazing to me to listen to the judge in the Coinbase case.
Yeah.
Debating with the SEC lawyers about whether laws written in 1933 could possibly be perfectly effective today, 90 years later. I mean, let's think, maybe a few things have been invented in 90 years, maybe. And to actually argue the point that nope, that's perfect is so disingenuous. It's kind of comical, and it just goes to the point of power. Well, I would like to maintain my power because that's good for me.
Hey everyone, we'll be back to the program in just a moment, but before we return, wanted to let you know about DAS London. DAS London is the largest institutionally focused conference in crypto hosted by Blockworks, but I wanted to give you an update because we are now 10 times oversubscribed for this conference. So the bad news is we have actually got to lower, as much as I love you guys, the listeners, we've got to lower our discount rate to margin 10. That's going to get you 10% off. I would highly recommend that you do that soon because you might have noticed ticket prices have gone up 200 pounds and they're only going up from here. And I actually can't guarantee that we're going to have this discount rate forever. Since we last talked, we've had a whole bunch of new great speakers sign up for the conference. We've got Brad Garlinghouse as a keynote. We've got Pascal Gauthier as a keynote. We've got new speakers signed on from Goldman Sachs, from Franklin Templeton, from some of the largest family offices and allocators based out of Europe. So Theta Capital Management, L1 Digital. And actually on day one of the conference, we're going to be having an investor day, which is a Chatham House Rules hosted by some of the largest investors in crypto. Then the other thing that happened is we've got our VIP tickets that just went live. There are only 60. And we've actually had a bunch of them that just sold out even in one day. So if you want to be a VIP at the conference, make sure you get your ticket. And again, use code MARGIN10 to hang out with me and Mark March 18th to the 20th in sunny London town. Cheers. This is the title of the Wall Street Journal article. The judge questions SEC's claim to regulate Coinbase. So the crypto exchange is seeking the dismissal of the lawsuit at the center of the agency's oversight strategy. So this is an ongoing suit between that the SEC has brought against Coinbase. Coinbase is seeking to dismiss it. And this U.S. District Judge, Catherine Polk-Fila, basically it sounds like she's starting to side with Coinbase. And there are a couple quotes here from this trial that are super interesting, which is, quote, "I want to understand how your standard does not sweep in the collectible market or commodities. It is a real fear that I have that your argument is just sweeping too broadly." I mean, I could go on. There's a bunch of quotes like this, but basically, it's just very. I'm not a legal expert. I hear this all the time.
No, it was amazing. I mean, I loved it because I do both of these things, Pokemon and Magic: The Gathering. They actually came up in the conversation. Basically, so you're telling me that Pokemon cards are a security? Right. Come on. I mean, right. And it's. And they use the term Beanie Baby. Everyone always comes back to Beanie Babies. Like, yes, people bought them on the assumption that they would go up in value because the guy who manufactured them said that over and over and over again on television, right? He went on Shopping Channel and said, yeah, these things are going to go up. And they printed lists of future value. And yeah, Princess Di Bear, they only made 1,000 of them or whatever. And if you actually still have one, and you can sell it on eBay for more, but that's not a security. And I don't. My mom used to have, literally like Tupperware containers of these Beanie Babies under the bed, like under and my dad was like, what are you doing? But, she was going to get rich on Beanie Babies.
It's one of the other sort of sound bites that came out of this discussion was that, they reiterated this. There were, in the XRP case, Judge Torres, made a distinction in between the token and the investment contract itself. The token and the sale of the token, so the contract. And it seems like this judge also agreed with that interpretation. So the implication here is that it looks like there are the foundations of precedent being built that many of these tokens, which the SEC has directly stated they believe are securities, it doesn't look like the legal system actually agrees with them and doesn't view them as securities, which would be huge. Because if you're a participant in crypto, like I am shut off from an enormous amount of products, airdrops, things like that. It's just frustrating. It's a little condescending of the legal system to, quote, protect me.
The next thing they're going to come after is my stamp collection. When I was a little kid, I accumulated this big stamp collection. Now I haven't touched it in 40 years, but you tell me that's a security, and that if I want to, well, what would happen is I used to buy big bags of stamps from H.E. Harris was the big company that back then that I bought stamps from. And then I would put them into little bags and I would sell them to all my friends on the street for, 10 times markup or whatever. And so I need a money transmitter license, and I probably just had fessed up. I'm probably going to go to jail or something for violating securities laws back when I was 10, but crazy.
Mm. So let's move on to macro here a little bit, and I have a feeling I know what you're going to say to this, but we had jobless claims come out, and they were basically weaker than expected. So we were expecting 205K. Previous was 202. We actually got 187. In terms of continuing claims, we got the expectation was 1840, and we actually got 1806. So looking basically strong. Like the labor market is still relatively tight. But I would be curious to, what do you think about that? Because I know, the birth death ratio, and, you've been talking about it for a long time, starting to see a lot of other commentators agree that this is kind of an outdated way of looking at the jobs market. But just anecdotally, it does seem like it's not.
Well,
It's not
unemployment claims are different, though. I mean, the unemployment claim numbers, those are pretty real, right? Unemployment claims, people got to show up. You got to file your forms. So I struggle with this one in that I do believe that the lowest level of employment is super tight. I mean, I see it everywhere. I tried to go to brunch this weekend with my wife. Our son was out at a play date, and we're like, oh, we'll have a date brunch. And so we show up, and we are number 76 on the wait list. This is Chapel Hill, North Carolina. I wasn't sure there were 76 families that went out to brunch.
That's nuts.
2 hours, Michael, 2 hours. And the food is good. It's a place called Snooze. I mean, food was good, but it just blew me away. But then when we got inside, I found out why. They didn't have enough wait staff. There were a bunch of empty tables, but they didn't have enough wait staff to bring the food out. And even when we got in, the manager finally came over to us and said, all right, let me get your drinks. And I've had multiple experiences, whether it's retail, restaurants. So I do believe, and probably this is despite this will be not favorably perceived, but despite the illusion that there's some invasion at the border, I think our immigration policy has changed a lot in the last 8 years, and we just don't have people, because the boomers aren't going to do that job, right? They're just not. And a lot of, and then there's there's this trough between the boomers and the millennials that, there was a baby bust. And so there's just not enough people. And maybe part of it is, it's a college town, the college kids, they're not actually going to do the work. They got credit cards and they're going to go, do the brunch. But I don't know. So I don't think there's a lot of unemployment at that level. But there's a huge amount of unemployment, but I don't think they file claims. Like if you're laid off from Google, I just don't believe those people are going and standing in line to file a claim. I don't think.
Yeah.
And I could be wrong. I could be totally wrong.
I don't think you are. But that is a relatively small part of the labor force, right? I mean, it's not massive.
1 million people. I don't know what the number. I mean, it's 1 million people have been laid off by big tech in the past year. And that to me seems like a big number. And again, I would think those people, they got good severance packages. They have some stock. I don't think they are filing claims. Like if you're a factory worker or a construction worker or a day laborer, you're going to show up and you're going to file your claim. Now, again, maybe I'm missing the boat on that, but that's my only justification is there are certain parts about the economy that look so strong, like waiting 2 hours to get a brunch. But then there are other parts of the economy. You look at the Empire State number.
Yeah.
Oh,
Huge miss. Huge
horrible.
miss.
I mean,
Yeah.
horrible. You look at Cam Harvey, right? Down at Duke, he's got this recession indicator. It's undefeated 8 for 8, and saying this time it's saying the same thing. You got the Druckenmiller indicator, which is a combination of things. Bank lending. Oh, bank lending went negative only for the second time in 100 years. So there are
Bank lending
things.
go negative.
Growth rate.
Oh,
The
okay.
growth
Okay.
rate of loans, right? The growth rate of demand for loans. Yeah. Sorry.
Okay. Yeah. Got it.
Again, figures lie and liars figure. It's like when people say, inflation has been eradicated. The White House says inflation. No, we got the growth rate back to a level that it was when you came into office, but that's still 3% of growth in inflation, and that's still understated. But it's growth rates versus actual nominal values.
I have one more question that I wanted to ask you, but I'm blanking on it. You know what I will say as a closing, maybe we can tease for folks who are coming to London. There was some talk internally at Blockworks about organizing a little, maybe an on the margin empire for folks who listen, a little hang in London.
Oh, absolutely. Shakespeare's Head, baby.
Yeah.
Shakespeare's Head is a beautiful pub. And we definitely need to do it. We definitely need to have, pints with, podcasters. Pints with podcasters. There we go. But look, DAS is going to be amazing. Not just because you guys are running it and because you've invited all the great speakers, but mostly because of who comes, right? And it's like this. Every week, we're given the gift to be able to do this, and people embrace it. And I had another one. I didn't have the in-person, hey, I listened to you every week, but I had another cool one where someone from literally halfway around the world in very broken English, because, his English was better than their language. And just saying, every Saturday, I'm right there listening to you. And here's my cup of coffee, and here's the picture. He literally took a screenshot of us talking like this. That's just so cool. And it's that community, and that and to be able face to face and have that community engage and share a pint, I think is going to be awesome. So
it's going to be a blast. It's going to be a blast. I also, I've mentioned this to you a couple of times, but we're tracking the inbound for this conference is bananas, and the list of people. It's like it's interesting because there are definitely people who are in the crypto industry, but there are a lot of institution. Like I see the reg list, and yeah, there's a very, very, very interesting and very institutional.
I think we've crossed the chasm on real, right? I mean,
yeah, totally.
The first part, like I would say, the first 5 years, it was a science project. I mean, a couple cypherpunks. I love when I'm debating with some of the maxis, and they're like, everyone could have done it when Hal and Satoshi were doing the first transaction. Like, nope. It was not widely known. It was not widely shared. There was a little message board of a couple people, and I'm internally grateful for those people, but it was not available to everyone. It's just a comical statement. And even in those first few years, Bitcoin pizza guy, everybody's like, oh, what an idiot. I'm like, no, thank you. Proving that you could do a transaction with Bitcoin.
Yeah.
No one knew what was going to happen. No one knew it was going to become digital gold because it wasn't intended for that. It was intended originally, right, to allow us to exchange value without a third party, peer-to-peer. That's what it was designed for. And I think in the back of the designers' minds, it was going to replace currency. That's going to take a while, but it's certainly the technology is there. But even in those first 5 years, the price was 0.00013 cents or 0.001 cent or 1 cent. The miracle was it went to $1.
Mm.
10,000 to 100,000? It's not a miracle. That's not a miracle. The miracle was it got to $1. Or pick a number, 50 cents, $1.
Yeah.
100%. Just that was the miracle. The last 10 years, even that, it's a really small number of people that care, that have knowledge. Now, it's not ubiquitous, right? There's still people. I mean, the video that's going around of the guy asking the two girls about, how long would it take you to go if you're traveling 80 miles an hour? And they're struggling. He didn't even have to ask them what's Bitcoin because I feel badly for those two young girls because it's failure of our educational system, not them. But it was kind of funny. And you ask those people what Bitcoin is, they have no idea. So, but the cool thing is, if you ask the people at BlackRock, they all know now. You ask the people at Fidelity, well, they've known for a long time because Fidelity's amazing and Abby's great. But you ask people at Deutsche Bank 5 years ago, like, what are you talking about? Now they're like, I'm going to this conference. You ask the people at Marshall Wace, right, very famous hedge fund, 5 years ago, they're like, what are you talking about? Man, they're smart. Maybe they knew a little bit, or a couple of other people knew a little bit, but now a whole bunch of people. I don't know, Paul himself might show up. But I think that's really the difference, is the number of people that have said, all right, I'll do the work. Because that's the thing. If you didn't start skeptical of this, you really weren't doing your job, because to just accept it at face value without thinking about it and being cerebral about it and having some doubt and some skepticism doesn't make sense to me.
I agree.
Now, the ones that did the best, and when I say best, meaning they were the earliest, were the ones that got through that doubt the fastest. Right? I would say, the Winklevoss twins and I, we got exposed the same month. They were smarter than me. They got it faster. Maybe it's because they were crew rowers, but it took me a longer time to do the work. But once you do the work, and doing the work doesn't mean you have to do complex mathematical calculations. It just means sit with it and think about it, talk to some people about it, and understand. Once you do that, you can't unsee it, and you can't not want to come to DAS. And not just DAS, but mostly DAS. And you can't not want to be part of this community. You can't not want to be with really smart people who are embracing new technology and literally changing the fabric. That's a big statement. Changing the fabric of society. That's pretty damn cool.
I'm with you, Mark. I'm completely with you. I think that's as good of a place as any to leave it. As always, best hour of my week, my friend. Can't wait to...
Always.
London is coming up soon. I can't wait to hang in person. It'll be...
it is coming. 2 months.
And, actually, to the day. So, yeah, it'll be very fun.
Thanks, man.
All right. You bet. Have a good weekend.